Hey everybody, it's your buddy Dow Jones Dave here, and thought I'd do a feature on my number one pick of the Dow components is Salesforce Incorporated. We like it because uh, where's my mouse? My mouse there. Oh well, my mouse disappeared, so this sucks. So anyway, I'll just talk. Look down at the bottom, you'll see the Salesforce CRM with all its numbers there. It was down on the week, as you can see from the chart. Uh, the PE currently is 77.73, and the estimated growth is 120.38%, giving it a growth PE based on its 3-year growth rate of 1.55, which is good. 55% undervalued, basically is how you read that. Or there's a premium on value of 55 cents. If you buy the stock, for every dollar you get in, you get 55 cents of value. They've never paid a dividend, so we're not worried about dividend cuts or anything. Now, the 52-week net EPS grew at a pretty good clip from 111 to 149. Their quarterly year-over-year growth, operating earnings, grew 665% on 11.44% growth in revenue. The 11.44% isn't green because it's lower than the estimated growth rate. EPS, of course, is green because it's higher than the estimated growth rate. Now, we should say last quarter they grew about 1,000%. So I think what we're seeing is a turnaround where earnings were super low, and you can get really good growth rates out of that for a while until the earnings get back up, and then it gets harder to grow. So if we look at the last fiscal year, it was $1.03. This is operating earnings, by the way, over on the right. 52-week earnings are currently at 274. So we've grown their earnings 170% over the last 6 months, and they're estimated to grow their earnings over 200% in the next 6 months till the fiscal year end. That is the majority of the growth in this estimated growth rate of 120% over here on the left. So we want to look at the period of the highest growth, which is the next 6 months. They'll make their fiscal year report for the last quarter will be in March, early March, I believe. And approximately then. We'll look up the report date before it actually get there, so we'll know. Now, my plan on CRM is to buy after the meltdown. And we are having a meltdown, by the way. It's in CRM. And you can see it's showing the same pattern as NVIDIA. Broke the trend, came up and retested, and rejected pretty hard off it. That's your signal to short. I'm not shorting this stock, though. I want to buy it. And I want to buy it when the GPE hits 2. Now, if we look at the calculation, the target is 162 because we're looking at an Elliot wave corrective wave calculation where A plus B equals C. So we look at A wave down as 38 points. The B wave up is 28 points. That's 66 points. 228, which is the top of the B wave, minus 66 equals 162. Now we look around 162, do we see any heavy support or resistance? And the answer to that is yes. The dark black line going horizontally, you can see how the market has gotten stuck around that point. And it's the strongest resistance point on the chart. So it seems reasonable to me that in a meltdown, we're going to end up down there at 162, which will put the stock at a PE 60, growth PE of 2. But if we take just the next 6 months growth, which is going to be about 200%, you end up with a growth PE of about 3.3, something like that, which is Ungawa. It's like buff. So that's my plan for CRM, is to wait till it tanks out and gets down at least close to 162, and buy it when it rejects and starts rallying. And by that time, the barometer might be zero. My market barometer is at 112, I think, 111 or over 110 again. And as it's the first time I've tracked a top with my barometer, seems like whenever it goes over 110, the market wants to dump. And that's logical because of what all the components of the barometer do. And it's not just the price drop. Like the Dow can go down and the barometer will still go up. And that's kind of what's happening. Well, it is what's happening. So at any rate, that's my plan. That's the calculation. That's the TA. And down below are all the fundamentals. And the fundamentals are why this is my number one Dow pick for the next 6 months after a meltdown. Anyway, this is Dow Jones Dave checking out.